Mid-cap mutual funds offer a unique opportunity for investors seeking both stability and strong growth potential. These funds invest in mid-sized companies that have surpassed the early stages of business development but still have room to expand. Positioned between small-cap startups and large-cap giants, mid-cap stocks provide a balanced mix of risk and reward. What are mid-cap mutual funds? Mid-cap mutual funds focus on companies with market capitalizations ranging from $2 billion to $10 billion. These firms are in a growth phase, meaning they have developed a solid business model but are still expanding. Unlike small-cap stocks, which can be highly volatile, mid-cap companies offer more predictability while still delivering high returns. Why invest in mid-cap mutual funds? Strong growth potential. Mid-cap companies are expanding and gaining market share, often outpacing large-cap stocks in growth. Less volatility than small caps. While mid-caps can be volatile, they tend to be more stable than small-cap companies, making them a good middle-ground investment. Diversification benefits. Investing in mid-cap funds adds balance to a portfolio that may already contain large-cap blue-chip stocks or high-risk small-cap investments. Historically high returns. Over the long term, mid-cap stocks have often outperformed both large-cap and small-cap stocks in terms of total return. Potential for becoming large-cap companies. Many of today's biggest companies, like Amazon and Tesla, started as mid-cap stocks before growing into large-cap giants. Types of mid-cap mutual funds. Mid-cap growth funds. These funds invest in mid-cap companies expected to expand rapidly, focusing on businesses with increasing revenue, earnings, and market share. Mid-cap value funds. Value funds focus on mid-cap stocks that are undervalued compared to their fundamentals, offering long-term appreciation opportunities. Mid-cap blend funds, a combination of growth and value stocks. These funds provide diversification within the mid-cap sector, offering both stability and potential upside. Risks of mid-cap mutual funds. While mid-cap funds offer strong returns, they are not without risk. Market downturns can affect mid-cap stocks more than large caps, making them susceptible to short-term volatility. Additionally, since mid-cap companies are still expanding, they may face challenges such as increased competition, regulatory changes, or economic downturns. How to choose the best mid-cap mutual fund. Analyze past performance. Look at the fund's historical returns over multiple years. Consistent long-term performance is a good indicator of reliability. Check expense ratios. Low-cost funds allow investors to keep more of their returns. Compare fees to ensure you're not overpaying. Understand the fund's holdings. Review the companies in the fund to see if they align with your investment strategy. Assess your risk tolerance. If you prefer a balanced investment, a blend fund may be better than a pure growth fund. Who should invest in mid-cap mutual funds? Mid-cap mutual funds are best suited for investors looking for a balance of risk and reward. They are ideal for those who want higher returns than large-cap stocks but with less volatility than small-cap investments. These funds work well for long-term investors who can handle short-term market fluctuations in exchange for substantial growth potential. Mid-cap mutual funds provide an excellent opportunity for investors seeking strong returns while managing risk. They bridge the gap between small-cap and large-cap stocks, offering both stability and the potential for rapid growth. By adding mid-cap mutual funds to a diversified portfolio, investors can take advantage of high-performing companies poised for long-term success.